Hi all, this is Steve Miley, the market chartist on behalf of forextraders.com, and we're now going to take a look at both the US dollar versus the Japanese yen and the euro versus the US dollar. Looking at the US dollar within the G3 currencies and seeing very much that within the G3 parameters of US dollar, euro and Japanese yen, the US dollar certainly the weakest of these G3 currencies, pointing US dollar versus Japanese yen lower and pointing euro versus US dollar higher. So this plunge lower we've had here in February for US dollar yen wiped out supports at 115.96 and then all the way back here from 2014 at 115.57. More importantly though, if we go to the longer term chart, the weekly chart, what we'll see is this large topping structure. It's kind of a head and shoulders style topping structure in here with two shoulders on either side and maybe even two heads. But the breakdown through support through this long term retracement, this is the retracement of the entire 2013-2015 up leg at 116.26, aiming now at 113.30, maybe as deep down here as a 110 handle as we go through mid Q1 into February. So bigger picture bearish pressure is very much intact for dollar yen. For euro dollar, caught within a range seen for much of the end of last year and into through January, February, but this explosion higher up through 110.60 and 110.96 resistances, setting up a better basing structure here. It's taken out this retracement level more recently at 112.86. Higher targets now at 113.95, 114.95 into mid-February, maybe all the way up to 117.14 into the second half of Q1 into late February, March. Only down through 110.84 starts to ease the bullish bias, but our bias for both euro is higher versus the dollar and for dollar lower versus the yen. This has been Steve Miley, the market chartist on behalf of forextraders.com, and I wish you a great trading week.